I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome to the show, Chris.
Thanks for having me, Jim.
The S&P 500, how is it performing, and what is it telling us about the future?
Yeah, there's a lot of things going on with the overall stock market as a whole. We've kind of been in a topping phase, what looks to be a major topping phase for really the past year and change. And I wrote an article actually just today talking about the Elliott wave analysis, the wave count for the SP 500, and it looks like we've had the wave 5, which is the final wave to the upside in this bull market. And now we've been in this topping phase pretty much through you could argue late 2014 all the way till now, so pretty much a 2-year stretch. And the market has been chopping around. It looks as though we're just about to start here on a major decline, starting a full-blown bear market. And if you kind of look at what's going on with the overall stock market cycles and the economic cycle, we can kind of get a good feel of how accurate that Elliott wave analysis is. Now, the stock market obviously goes in cycles. We go from a rising bull market, it'll eventually top out and decline for a couple of years into a bear market, and just repeat that cycle with an overall upward bias over the long run. But what we see during different parts of a bull market, we see different sectors outperform and other sectors underperform. And typically in the early stages of a bull market, we see the transportation index, like the IYT ETF, outperform. The transportation index sees the economic cycle slowly starting to strengthen and bottom. And of course, transportation stocks take off because they are going to become extremely busy again. Great earnings, so there'll be lots of products being shipped around the world. Money will be flowing. So that's in the early stages of a bull market. Now, at the late stage, the topping phase of a bull market, you see the more conservative plays. You see energy stocks perform really well, and energy in general, and you see precious metals. Those are the two major sectors that perform the best, that hold up really well and prosper during the final stages of the topping stage of a bull market. And that's exactly what we've seen. And if you were to pull up the energy sector ETF and precious metals ETFs, whether it's the physical metals themselves or gold stocks or silver stocks, they have been performing extremely well this year, while the SP 500 has been really just trading sideways for quite some time. And, all those things are starting to point to, a big flashing red sign saying the stock market cycle seems to be topping. Money is rotating to these specific sectors that always seem to perform well just as the stock market is topping. And of course, we see the stock market typically lead the economic cycle, meaning the stock market will top out and start to fall before we see businesses sales decline, really bad earnings, because the stock market kind of foresees what's happening 6-9 months in advance. So I think we're on the early stages here, or the late stages of a bull market, and we're just starting to see earnings are, they're not as good as people were expecting, and I think it's going to get worse, and we're going to slide into a bear market, I think, a pretty strong one by the end of this year, based just on those key points.
Well, Ford sales and GM sales were down. Is that kind of an indicator of how the consumer feels?
Yeah, Stan Weinstein always used to use GM, I think the stock was, as his overall market kind of barometer. He says if GM is down, so will the market be. So overall, it makes good sense according to his theory, and it falls in line with everything that I'm looking at in the stock market. The stock market right now, it's had a really strong recovery. You could argue it's trying to put in a little double top here from the April highs, or potentially a triple top going all the way back since more or less last year. We've seen kind of we saw the original top out in May, and then we had the big drop there in August to September, and then we had this big recovery back up into November, December, and then another big drop in January. Now we're back up there for a potential triple top formation. We've seen lots of distribution going on in stocks. A lot of stocks are being sold off. The stock market is being held up by just a handful of stocks in general, really doing all the heavy lifting. And we're pretty much at that do or die point in the stock market. It's doing a great job of trying to get everybody to become very bullish. A lot of us are very bearish right now, depending if you're a technician or not. But it's flirting with a point here where if it does break and start to run a bit higher, it's kind of going to avoid the bearish overtone that has on the market, because it'll be making a higher high. But stock market tops are very difficult because the market likes to try and shake everyone out. So in December, January this year, we had that sharp 2-month decline in the S&P 500, and then we had this really strong recovery rally bringing us up to this potential triple top formation. And the market is doing a great job trying to get everyone to be bullish on the market. Investors and traders are starting to see the market as that it doesn't want to go down, that it's going to go higher. And what I see going forward is, according to cycle analysis, if we roll over here, it's going to be a triple top formation, and we're going to see about a 2-month decline, bringing us back down to potentially that 1800 mark on the S&P 500, which is a pretty significant drop from where we are at 2100 right now. So that's kind of what I see going forward based on all this analysis. I think it's going to be a pretty ugly summer for stocks, but the market is flirting with that critical level that if it can pop and rally and break, run up another 50 points or so, it could technically kick us back into another uptrend. But right now, the market internals, all the cycle analysis, the leading sectors are all kind of pointing to lower prices are on the horizon.
Some people feel that the big correction at the start of the year was enough to fix the market, and that this is a true rally. Would you agree with that or disagree?
Well, typically, if you looked at the overall psychology of the traders and investors, when the market kind of is in a topping phase, it's kind of like you have that huge bout of selling and massive panic. Everybody completely freaks out and bails out of their position, and they feel like that cleansed the air. Well, really, the last two big sell-offs, I think in the one in January specifically, I think all it is the market. It's just big waves of selling of what people are seeing looking forward, 6, 8, 12 months from now. They want to get out of these plays, out of these positions. And this is what happens during a topping phase. And the average market participant sees it as, oh, it cleansed the air, we're all good, I survived, it's not the end of the world, now it can go higher. But really, it's denial. They're denying the fact that there's huge distribution selling going on. These are massive waves of big money selling, and these are just a couple shots across the bow. We've had 3 of them in the last year or so, and I think it's just the starting. And the market keeps rebounding and holding up because they're still kind of optimistic, and they're kind of blind to accepting that the market is topping out. It's been years of a bull market. It seems like it's time to go down, but these people are going to be caught on the wrong side of the trade. I don't think that it's cleansed. I think this is just starting to build momentum. We had the initial big drop we saw back in October of 2014. That was kind of the shot across the bow, and then we had one in August, September last year, and then we had one in January happening sooner and sooner. We're making lower highs with these huge waves of selling. And once the large cap momentum has changed direction from this kind of upward sideways trend, once that momentum is turned to the downside, it's going to be a lot more selling with just knee-jerk reaction rallies that get sold into again. So, what people are thinking that this cleansed the market, that's usually what people think because they don't want to think of their portfolios falling. They want to stay positive, but they're just not accepting it.
A few months ago, we did have a report that Canadians had already sold a lot of stocks and were holding on to something like $73 billion in cash, waiting for a major market correction. Do you think any of them might have been sucked into this latest rally?
I think so for sure. Being based in Canada, I hear what everybody's talking about. Everybody has been excited about, crude oil putting in a bottom, getting into energy stocks. Their timing, has been pretty good because this is a time when energy and energy stocks seem to do well. But when the overall stock market does roll right over into a full-fledged bear market, we're probably going to see the energy stocks get pulled right back down again. They're going to flounder just like we saw in late 2008, 2009, where they'll trade wild in this big sideways range. They may not drop a lot, but they're not going to go anywhere other than just chop up and down in this huge range until the overall stock market finally cleanses itself and bottoms, and then they'll move higher. So I think a lot of people are getting sucked into it. But when it comes to stocks in general, like energy stocks, I do feel like they're going to be under a lot of pressure over the next 6-12 months.
We'll have more with Chris Vermeulen right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, gold and silver have dropped the last few weeks. What's their long-term prospect?
Yeah, gold and silver, long-term, I'm very bullish on gold and silver going forward. I think there's a lot of things that potentially could fuel a massive rally in the metals and the mining stocks in general. This pullback that we're seeing, we've kind of forecasted it. We kind of expected it with the downward cycles were kind of topping out for a short-term basis, and we don't have them bottoming for another week and a half. At that point, I do feel as though gold to the upside, I think the next stop is going to be about the 1400 mark. I actually have 1396 as the next kind of stop to the upside. I think gold and silver here are going to flounder, trade a little bit lower for another week or two, but then I think it's going to put in a bottom. We're going to see a really strong rally. And the whole market in general, whether it's precious metals, the U.S. dollar, the stock market, I feel as though everything has kind of lost its momentum. They're all trying to shift and change directions, but we're waiting for some type of event that's going to trigger the big move and the big shift in gears. So I feel like right now everything is pretty choppy. Everything's really noisy. They haven't fully changed direction, but they're very close. And it's just a matter of a big positive or negative event that's going to just come out of thin air, that's going to trigger the whole thing. Just like every bear market, it always seems like something eventually happens that triggers it, and we all blame it on that event, but it's not always just that event. It was just the catalyst to spark that momentum to actually just flip over and pick up speed in the other direction. So that's what we're waiting for, is some event, and things are going to go ballistic. Metals likely through the roof, stocks, through the floor, and I think the dollar is going to get hurt really bad from the looks of things. So that's kind of what I'm expecting or looking for.
And I wouldn't expect it to be something in the Middle East, because over the last couple of years, we've had some major shocks in the Middle East and the markets didn't react at all. So it'll be something else.
Yeah, I think so too. I think it'll be something mostly to do either kind of U.S. based. I have a feeling it'll be something big. It could be something big in the Euro land over there.
Well, on the 23rd, we have the Brexit vote.
Yep. Yeah. I have no idea what it's going to be, and nobody really does until it happens. But I do feel like there's going to be some type of financial stress. You remember how everything used to go through the banks through the stress tests, and I did an article talking about the economic stress test and how it's like how you can gauge it and get a feel for where we're at. And I'll tell you, the market and Americans, because it was all based on American data, is extremely stressed out, and it's just hanging on. And when all we need, again, is just that little nudge for people to get a little more scared, and the trends are going to change. Money's going to start flowing in and out of different things at extreme rates. But we're just in this kind of chatter of no man's land. Everybody's like, I don't know what to do. I don't want my money anywhere, which is probably why, Canadians are holding huge reserves of money. We are fairly conservative in nature, so when we don't know what's going on, you just kind of lock up and you just kind of, play it safe and do nothing. Just hold on to cash and wait until you have a feel for something, right?
Yeah, and do we trust John Poulos, the head of the Bank of Canada, to do the right thing?
Yeah.
Yeah, boy, that gets a lot of reactions, doesn't it?
Yeah.
If you're waiting for central bankers to save your bacon was baked a long time ago.
Yeah, for sure.
What about gold miners? I noticed even the venture exchange was down today, and of course that's mostly your junior mining stocks, but their long-term prospects are pretty good if they've survived this long, I would think.
Yeah, I like gold miners. I like them long-term. I think they're going to be great. I think there could be, I talked about it this morning with subscribers, that I think we could see one more kind of half-decent washout here where, for example, the GDX today is trading at 22.80, and I think we could see it have one final stretch all the way down to, the $20 mark potentially. So we could see a pretty decent a drop, but that's only going to last. I think this is going to happen within a 2-week range, and then I think it'll be off to the races and running much higher, because whenever we see a big drop in miners, we see record amounts of money flowing right back into gold and gold miners. So everybody's sitting there waiting to accumulate on the dips. The charts look a little bearish right now for some weakness over the next 10 days, trading sessions or so. But after that, I think it could be off to the races, and it'll trade either sideways for a while and build more of a base, a launch pad for the next major leg up before it goes, or it's just going to start and rally right away. But the next leg up, when it breaks this previous high that we saw back in May here, that next leg up could be huge. It could be one of those ones that if you're not in it, there's going to be no pullback to get in. You just have to jump and chase it, because the market, I think so many people have been waiting for this, that once that momentum starts, we're going to just see it explode in value, and it's just going to run like we see in every beginning of every gold market. Gold miners go ballistic, 600-700% for so many of them. They just run ridiculous amounts, which is fantastic as long as you're in.
Is this a case where maybe not being an averaging kind of buyer, where you buy the same number of stocks every month, not a good idea for gold?
I think it's a great idea when everything is showing that we're about to start a bull market. I think averaging in at this point is way better than averaging in sometime after 2011, because right now we're seeing strength in the sector, we're seeing weakness in the dollar, everything is starting to shift that these are going to be the next kind of, top performing asset class. So that's when you want to start to average in, and then when they break out and start to run, there's your confirmation, and then you can throw more money at it and hope it sticks, because once the confirmation kicks in, everybody piles in. So this is the time in the basing. This is where a lot of people are accumulating positions in miners, and then when it breaks out, it's just the average market participants and the feeding frenzy they create that run the price higher. You don't really want to be buying it up there. You want to slowly be accumulating it on pullbacks like we have this week, potentially next week a little bit lower, and then I think it'll be working its way higher going forward.
Chris, thank you very much for talking with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen, the goldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.